All right, Candle Range Theory Trader back with you with another video, just talking about how one candle can change everything, and these indicators can help. So let's get into it. There's tons of candles, tons of candlestick patterns. Some people don't even trade candlesticks; they trade line charts, bar charts, open, high, low, close models. Either way, but at the end of the day, a trader has to answer which candle or which pattern should I choose. Okay, which one out of all of these, because they're all tradable, which one should you pick? So you can be a generalist in trading everything. You know, you could trade dojis, you could trade, kickers, engulfings, three white soldiers, three black crows, all this other stuff. You could try to develop a system for all of that and be a general practice type of person, or you can be a specialist and think about a specialist as of a doctor. Think about a doctor who only does like ear, nose, and throat, or a doctor who only deals with the hand, or a doctor who only deals with the brain, a neurosurgeon. Okay, he or she only does one thing, a specialist or a generalist. And remember that, at least here in the United States, a specialist earns significantly more than a general practice doctor. Think about that. The doctor who does one thing exceptionally well does much better financially than a doctor who does multiple things. Isn't that something? Because remember, at least here, when you go to a doctor, they may refer you to a specialist because he or she is like, hey, look, your problem, you got to go see, Dr. Such and such down the way. I can't help you. Wish I could, but I can't. And because of that, that doctor can make almost double of a general practice doctor. So, what do you want to be, a specialist or a generalist? They both can do okay. It's just one does a little bit better. So, if you specialize in this one candle, you can 10x your earnings. Okay. This is the open, high, low, close candle. This is the only candle that I try to trade. The only one. All right. It is my sole focus every single day I get on the chart to try to capitalize on this kind of price action right here. Am I always successful? No, but this is what I look for. So it's not enough to know the candle alone. It has to be in the right context of the market. Now, for this, I use candle range theory, okay? Because I'm not interested in trading this candle. I'm not interested in trading this candle. The only candle I'm looking for is this third candle right there, the specialist mentality. That is what I want to specialize in. This one candle right here. This is all I look for. But in order to start to trade it, I do look for this and this to play out first. But this candle is not so much about, this video is not so much about the candle range theory as much as it is capitalizing on this type of price action right here. So the indicators that can show you these candles are as follows. They are candle size in pips, engulfing candles, and swing highs and swing lows. So let's go to the charts and I'll show you all of these candles, all of these indicators right now. Okay, so here we have a blank chart on pound yen. Okay, pair doesn't matter. So let's go over engulfing candles first. So, and I'll go over the setting for each indicator so you can see it for yourself. Now, obviously, though, do you need an indicator? No, you could just use your eyes and you're just looking for the big candles. And then I would look for the candle range theory and context for that. So this first indicator here is going to be the engulfing candles by, let me see here. Let me go to about. Okay, engulfing candles. I'm not sure who it's by. Hold on. Sorry, I want to be sure to give you the right one. So I'll go to indicators. Okay, engulfing candle indicator by R. Munoz. I hope I'm saying that right. Okay, that one right there. That's what you're looking for. Okay. As far as the settings goes, it does have some extra stuff that I take out. I take out, or do I? Hold on. It must be the other one. No, yeah, I think this is it. Yeah, that's the next one that I take stuff out. Okay, so what it's going to do is give you a green arrow if the candle is engulfing the prior one, or a red arrow if the candle engulfs the prior one for, bearish, green for bullish, obviously. Okay, now just because you see the indicator does not mean, oh, okay, well, that's my candle that I trade. It has to be in the context of the candle range theory. So in essence, these are the two patterns that I look for because I only look for two. I see one plain as day. So I'm going to do this one right here. And I'm going to mark the high and the low of the range candle. Now, this is a two candle pattern. It's a little less common, but it can occur. Candle range high, candle range low. Replay option. Okay. All right. That right there is my candle that I want to trade. This one right here. This will be a what's called a 5-9, and I have videos on this channel about that. But in essence, this is what I'm looking. So what I do at this point is I study this candle. Now I take entries on the 5-minute chart. So I'll go. Let me do this. Let me go back one candle. And the point of this is to help with your back testing so you know what to look for. So at this point, though, you really don't need the indicator anymore. So I'm going to get rid of that. Remove the indicator. There we go. Okay. What I look for, if this was a 9 o'clock, I would look for, because remember, if let's go back to our open, high, low, close model right here. If I'm bullish, I want to be in around the open price or in the wick of this candle. That's my entry zone. Around the open price or around the low of this 4-hour candle, 4-hour chart. Can you use this on a daily chart too? Yes, you can, but that's about it. This is only really good for the 4-hour or daily chart, not the 1 hour, definitely not the 15-minute. Okay, so where is the 9 a.m. open? It is right here. Okay, this red candle. So there's the 9 a.m. open right there. So for the sake of candle range theory, I like to be in above the range. Okay. So I wouldn't trade all of this down here. Can you? I mean, if you want to, but the way I trade my rules, I wouldn't take this trade and put about 10.25. That would be my entry. Okay. But that will be the entry right here. I'll mark that. And then the exit at the range high right there. Okay, so everything's already built in. But the point is, though, as far as the candle goes, that's what I'm looking for. Okay, I marked the open. Let me do that. There we go. Marking the open, looking for a good entry, and then expecting momentum to the upside. Okay, momentum to the upside based on this one candle. Okay, because once again, this one candle is all I'm looking for. Now, that's a 2 candlestick pattern, though. 1, 2. Okay, but the one I just showed you was a 3 candlestick pattern, which was this one. So let's see if we can find a bullish example. I'm sorry, a bearish example of that, and then I'll move to the next indicator. So we'll get rid of this, reset the chart view. Let's get the indicator back up. And here's one right here, plain as day. Oh, I had it and I lost it. Okay, there it is. This one's not as clean as the chart I showed you, but I'm going to explain how this would work in just a second. There's the high. There's the low. Okay, and remember this indicator, see that showed that to me because you're looking for the high of this middle candle to hold. And the thing is, let me do the replay. There we go. Okay, so now we're going to get rid of the indicator because we don't need it. This range is valid to me because this candle only broke it by about 7 pips. So to me, just a rule that I use, at least as far as trading candle range theory, if it doesn't break out of this range candle by about 5 pips or so, then it's okay to look for this type of price action. That's the range candle, the next candle in the middle, and then we try to look for a straight drop. So I'm still looking for price action below the range high. So this will be a little different, but you'll see in a second the profit potential. So give me just one moment here. We'll reset that. Where is the range? Oh, well, let me get the times. I'm sorry. This is that was at 2100 hours or 9 p.m. Eastern Standard Time. That's at 1 a.m. Eastern Standard Time. We start trading at 5 a.m. Eastern Standard Time. So this is a 915. Okay, 915. 5 a.m. Eastern Standard Time, aka London session. So reset the chart there. I want to start trading when price breaks inside of the range high, which happened right here at 5:30. So even though the 5 a.m. open is right here, okay, that's the 5 a.m. open right there. But so can I take this trade up here above the open? if you just want to try to trade that, you can. However, the safer bet to me is to wait until price goes back inside the high of the range candle, which will be right here. Okay, so that's how that would go. And then obviously, as you see, price broke out a little bit to the downside before it retraced, but this was a drop of, if you entered right here at 530, that was good for 40, well, all the way down to the bottom, 65, 67 pips, even a little more than that. So if you scale into that position, I mean, you're talking about possibly like a 1 to 6, at least on your base entry. So you risk like, say, $100 to make $600, or you risk $10 to make $60. All right. So that right there. But again, this candle is all I'm looking for. I specialize in this type of price action right here, nothing else. Okay, I want the biggest move possible in a 4-hour period. Or if you do the daily, you want the biggest moves possible in a 24-hour period. Okay, that's what I look for. So we'll get rid of that. And let's go to the next indicator. The next one is, I'm going to hide engulfing and let's do candle pips. This is the one that I had to modify a little bit. So candle pips by, let me see if I got it on my favorites. Yeah, okay. Candle size in pips by ANRAZZI. I'm not even going to try to pronounce that. All right. So, but that's it. Now, what's the point of this indicator? This indicator is going to show you candle sizes that exceed a certain pip value. Okay. And you can set that. Now, I like to get at least 50 pips on a trade, or at least I like to see, the price expand. I see this candle right here be at least 50 pips, and then I get a piece of that. Maybe I get 30 out of it. Maybe I get 40. Maybe I get more than 50. Okay, but either way, that's what I like to see. So this indicator is going to show you which candles exceed that. So as you line it up and see, okay, this candle's 56 pips, this panel's 43, et cetera, you see where you might see these distribution candles in relation to the candle range theory, because there was a 63 pip opportunity here, but did it align with the candle range theory? That's the point. Okay, and there's one right here that I'm going to do in just a second, but let me show you the settings for this candle that I use. Now, if you want to change that, you can. It's up to you. But for the minimum candle size, I do 40. So I'm like, if it's under 40 pips, I'm not interested. Don't highlight it. Maximum, I just did 300. It's rare to see a pair go 300 pips in 4 hours. And then for the bullish and bearish shape, I changed those to black. I'm sorry, I changed them to white. I changed the font color to white, and I changed the opacity to font color stays black 100%, but it's these shapes here. Sometimes these shapes get in the way of the candle, so I changed them to white and pretty much made them see-through. For the shapes, see-through there, and then shapes here, see-through there. Sometimes they still may appear. They just kind of get in the way a little bit. Like you'll see a little, I don't see it right now, but you'll see like little circles because it has indicators on there that'll like really try to highlight it heavy. And I just don't need that. I just look for the number and then I line it up to the candle, and that's it. If it's tricky though, you can just measure it. Like say for instance, this candle's right here is 63 pips. So we'll measure that just for them open to close. And let me go over that. So from the top of the candle to the bottom, I'm measuring this green candle here. And maybe that might not be right. Hold on 1 second. Oh, open to close. Okay, not high to low. Yeah, from open to close. I'm sorry. Yeah, it just measures the body. So if you just measure the body of it from this body to the bottom, yes, by about 63 pips. This green candle right here is what I'm measuring. Now, if you want, you can set it from high to low. So it'll take the wicks into account too. So it's up to you. There's no one way to use this indicator, and just experiment. So if you want to go right here and say from high to low, see how it's going to change, and see how this is 93 pips, right? Either way is fine. It's completely up to you. All right. I just did open to close because I wanted to see the body. So, but like I said, it's up to you. Open to close. So I'm going to go open to close for the sake of this example. And then let's see what we can see. So, all right. So here's the candle range right here. That's the low. That's the high. Now, this one is not the cleanest example only because this middle candle here is not exactly a doji. Okay, I prefer dojis, but however, once a price pokes below a range and then closes inside of it, it does have my attention, especially if this is a 159. So this is a New York session trade right here. So I'm just using it for the sake of saying, okay, This candle right here is an expansion candle. Can I use this as my specialization technique? So what we'll do now is mark the opening price, which is around here, 9 a.m. And remember, we went through, this is one where we want to be in below the open price, but above the range. So we'll go down to the 5-minute. I can get rid of the indicator. I don't need it anymore. Okay, that's only good for the 4-hour one. Let's see. Okay, so here's the 9 o'clock open right here. And now that price is already inside the range, you are free to trade anywhere inside this range below the open price. See how that works out? Because let's go back to our example here. We specialize in this candle. Okay, so our trading is right here in this wick. Ideally, you want to be in around the wick. That's our specialty, catching these wicks. So let's say if you got a perfect entry right here at 10:45, right there, that would have been good for, at least for this 4-hour block, that was good for 80 pips, okay? Or assuming a 10 pip stop loss, that would have been 1 to 8. All right. I mean, you can't beat that, okay? And make that your specialty. That's all you're looking for, okay? Just a big, strong move after the candle range theory plays out, after candles 1 and 2 play out. This is all you're looking for, okay? That's all you want to see. This type of price action if I'm long, this type of price action if I'm short. Okay, so that's that indicator. Let me get rid of this 4 drawings. I'll go back to the 4-hour, and let's go to a different pair for the last one. Let's try Euro Aussie. Let's get out of the replay. All right, so the last indicator that we're going to use is going to be the swing high and swing low by Lux Algo. So that's going to be this one right here. Okay, so the settings for this one, what I do is I change the length to 3. You'll see a bunch of swing highs and lows highlighted. But the goal is just going to be, and this one to me probably is the easiest one to use, because typically with the candle range theory, it's typically a swing high. Candle 1, candle 2, candle 3, high, higher high, lower high. Okay, see that? That is a swing high. Okay, a typical, stereotypical swing high. So let's find one and match it up to the pattern. Now, will they all match up perfectly though? No, because this is a high, higher high, lower high, but that doesn't quite fit what we're looking for. Okay, that's kind of a breakout. I want to see something a little cleaner. So let's see what else we can find as we scan through them. Let's see here. I might find a long example before I find a short one. Oh, but no, this is a beautiful one. Look at this. Okay, yeah, I like that. All right, so here's one right here. Right there. Okay, but let me show you how to, let me mark the range, and then I'll show you how the indicator pointed that out for us. That's the range high. That's the range low. Okay, so as far as the times go, this was at 2100 hours, or 9 o'clock p.m. Eastern Standard Time, 1 o'clock, and then 5 a.m. Eastern Standard Time. So a London session trade. Let me get out of this so I'll show you how the indicators show that to me. Okay, see how the indicator said this is a lower low right here? So it pointed out 1, 2, 3. So this indicator is going to show you the middle candle. It's going to show you what I like to call it the money candle. It's going to point out these candles right here, the peak of whatever the swing point is. That's what the indicator is doing. So it's pointing out as many money candles as possible. But again, you have to discern and cut away the ones that don't work and the ones that do. Because at the end of the day, I'm still looking for a 3-candle pattern. And this following candle is where that's our price action right there. You got 2 of them back to back, but really all I want is this one. So now let's go down to the lower time frame and see where our entry was. There are times, and I can get rid of the indicator now because I don't need it. And we'll go down to the 5-minute. There are times, let's mark our 5 a.m. open, where price will just do a straight rise. And it won't even go, there won't even be a wick. So 5 a.m. open was right here. Right there. Okay, so it was right there. Now you did get one chance. You could have got in right at 5 and just been done. You got one more chance at about 535 to 545 or so, somewhere in there. But after that, price just straight up broke out of the range. Okay, and because again, we're looking for this straight rise to action, or straight rise to profit, because remember, small candles can lead to bigger ones. So remember, when it comes to these types of candles, they're typically preceded by small candles. Okay, small candles, big candles. We want to trade big candles, so we like to see small candles. All right, but this trade was good for 58 pips, straight rise in 4 hours, done. Okay, imagine scaling into that. So there's our entry right there. Okay, and sometimes you'll have it where it'll just break out of the range. All right, so, but again, that's how indicator helped us pick and specialize in this type of price action. I'll do one more swing low and then we'll call it. We'll remove the drawings. And let's go to the Lux Algo one more time. Okay, and whatever you do, remember to save your chart pattern as well. Okay, so here's a short example right here, plain as day. Okay, see how this isolated the money candle. There's the range high. There's the range low. And look at that. There's our trading candle. I mean, it's too easy, guys. Okay. The trick is though spotting this in real time. Because I'm going to be honest, the point of this, while it's helpful in back testing, it's just helpful in back testing now. But these indicators will not help you in real time. Okay, that's something only your brain can do. So this is the part where you just let me get rid of the indicators. This is the part where you train your brain to say, okay, don't trade until you see this. Okay. So I forgot to get the times. Hold on a second. Okay, so this was a 915. So this was a London session trade. So let's mark our 5 a.m. open price. 5 a.m. open was right here. Okay, and we want to try to be in around the open price, okay, because this is, once again, this is just this. Okay, this is what we want the finished product to look like. So ideally, we want to be in around this open price. You could have entered right here at 510. And it was good for a 69 pip drop to the range bottom, or if you kept holding, it went down. It might have went down 100 pips. Let's see. Because if you want to hold to the candle close, you definitely can. Let me see. Yeah, that went down all the way to the bottom, 132 pips. Now, is every move going to be 132 pips? No, of course not. Okay, it's going to depend on the average daily range of the pair, among other things as well. But that right there, okay, so let's go back out to the 4 hour. Okay, bang. That's all. That's my specialty. That's what I strive. That's what I strive to trade right there. Okay, so again, the point of these indicators, I'll go back to the list. The point of these indicators is to help you identify where the candle is and how you can capitalize on it. And it's just going to help you. It's going to train your mind to say, okay, this is the price action I want to see. And if you don't see it, don't trade it. All right. So hope that video was helpful. Toy with the indicators, experiment with them, see which ones you like the best. Like I said, I like the candle range theory. I don't trade random expansion candles or distribution candles. I like to see them in as they fit into the candle range theory. But if there's another method that you want to try or just invent, feel free. I don't have a monopoly on good trading. Nobody does. But I appreciate your time and attention. Hope you have a great rest of your day and take care.